All right. So today for the deep dive, what I wanted to do was kind of bring to light the concluding statement of the 2024 Article 4 mission. It's the IMF findings after an official staff visit to Saudi. And I think it is, it's a pretty dense report. It really does go into all different dimensions of the Saudi economy. But I thought I'd bring it to light on the show and really just talk a little bit about what it highlighted about the Saudi economy and recent economic developments. And it really just summarizes it in the very beginning of the report, where it says that Saudi Arabia's unprecedented economic transformation is progressing well. Prudent macroeconomic policies, transformative changes, including through fiscal reforms and in the regulatory business environment, and strong domestic demand have really helped prop up non-oil growth. Inflation remains contained, spending reprioritization and recalibration of major spending programs are ongoing. Efforts to diversify the economy have started to bear fruit. Building on these successes, it will be important to sustain the non-oil growth momentum, maintain financial sector stability, continue mitigating risks of overheating, reverse declining total factor productivity, and ensure intergenerational equity. It's a lot of big words. But I think the headline really is that it's all going in the right direction and it's really positive. And again, kind of just thinking about some of the feedback that we get about the show on how Western media can be quite negative about what's happening in Saudi Arabia. A lot of what the IMF has reported on in this report is kind of showing how some of these changes, the recalibration of spending, refocusing where, kind of the giga projects are going, and thinking about all of the new fiscal policies that are in place. These are all positives. They're not necessarily negatives. And I think that that's really important to highlight when a global international organization comes in and says, no, these are the right things that you're doing. This isn't an indication of failure. This is an indication of positive economic and sound economic decision making. So it goes on to list quite a few different developments, starting with economic activity and looking at real non-oil as well as oil GDP. So real non-oil growth decelerated from 5.3% in 2022 to a still robust 3.8% in 2023, driven mostly by private consumption and non-oil investment, with the latter tapering off to 11.5%. Down from an exceptional 32% growth in 2022. And oil GDP contracted by 9% in 2023, due primarily to Saudi Arabia's OPEC Plus and voluntary oil production cuts, leading to a 0.8% contraction in overall GDP. So while non-oil growth for Q1 2024 indicates some moderation in economic activity, staff estimates that the output gap remains in positive territory, close to 2% of the non-oil potential GDP. Additionally, they talked about unemployment, which has reached a historic low. We've talked about this before on the show. In 2023, the Saudi economy added over 1 million jobs, primarily in the private sector. Now, this is a question I get all the time. How are we going to get Saudis to start working in the private sector? Aren't they really wedded to their public sector employment? And actually, no, if you look at the trend, we are really adding a lot of jobs within the private sector, and a lot of Saudis are going into the private sector. The overall unemployment rate for Saudis dropped to 7.7% in the last quarter of 2023, inching closer to the 2030 vision objective of 7%. And labor force participation rates have remained at historically high levels. They're relatively flat over the past year for both men and women, but women's rate is still comfortably exceeding the Vision 2030 goal of 30%. So that is, again, one of the success stories that is highlighted when talking about the Saudi economy and the vision and what's happened with women's employment. Inflation has decelerated rapidly despite some pressure pockets. as well. So this is, again, when you look at the world and inflation levels that have been very crippling over the past couple of years, within Saudi, it's still looking good. After peaking at 3.4% in January 2023, year-on inflation receded to 1.6% in April 2024, helped by an appreciating normal effective exchange rate. However, rents are growing at a brisk rate of about 10% amid inflows of expatriate workers and large redevelopment plans in Riyadh and Jeddah. Wholesale prices have also edged up recently, reflecting an increase in input costs. So far, some uptick has been observed in the wages of high-skilled workers. It also goes on to talk about the economic outlook and risks for the future. So basically, there's been a recent recalibration of funding requirements associated with the Vision 2030 objectives and some of those giga projects that we've been talking about. Its application led to a spending reprioritization through the acceleration of some projects and sectoral strategies and extension of the timeline for others. This exercise will help ensure proper sequencing of spending aimed at reducing overheating risks and maintaining fiscal and external sustainability. So the IMF staff is of the view that making public the main implications of this exercise, particularly on spending and sectoral priorities up to 2030, will be important to help provide clarity on government priorities to investors and to the public. And I think that's been happening. There's also been, it also reported that domestic demand is expected to remain the main driver of economic activity within the kingdom. Non-oil growth is projected at about 3.5% in 2024 as investment growth moderates before picking up in 2025 onwards, including from the PIF and in the lead up to the 2027 Asian Cup, 2029 Asian Winter Games, and 2030 World Expo. Oil output is projected to contract by 4.6% in 2024, but increase by 5.1% in 2025. Finally, it does also talk quite a bit about fiscal policy. From a fiscal perspective, Saudi Arabia's finances are in a decent position, but they need to take some steps to make them more sustainable in the long run. This will involve finding new sources of income and cutting back on. It had a budget surplus in 2022 for the first time in years, but went back into deficit in 2023. And the main reason for the deficit is higher spending on projects and lower oil revenue, despite a new payment from Aramco. Public debt is still low compared to the size of the economy, though. And looking ahead, the deficit is expected to be around 3% of the economy's size in 2024. And over the next few years, it's likely to stay around that 2.5 to 3% of the economy. And it's because of the government's plans to keep spending on projects, even though non-oil income isn't growing perhaps as fast as they would like it to. However, as we've seen, it's exceeded kind of the expectations. So just relying on oil prices is going to be tricky, and therefore there might be other ways that the government's going to raise money, perhaps through more taxes, cutting down on subsidies, especially for fuel, would save government money. These are some of the recommendations from the IMF, which are pretty much in line with what they normally recommend. And it could be done by gradually raising prices and helping those who need it most with targeted programs, which again, through some of the reforms within the support systems and the social safety nets, this is something that is already underway within the kingdom. I think, there's a lot more in the report, and I tried to pick up on some of the key things. But generally speaking, some of the comments that were made by our guests in the past couple of episodes were also highlighted within this report from the IMF, talking about the financial sector that is growing and reforming, especially when thinking about kind of the regulatory framework, just different ways of making sure that there's investor confidence and that there is a more modern and regulatory framework for safeguarding and for financial stability. I'm going to stop because I've said a lot of things already, but perhaps, Lucian, you want to pick up on some of those points and we can maybe even talk about it more. But this report is public. It's available on the IMF's kind of website, and you can read about the results and kind of the specifics.
Yeah, and we'll include a link to it in the segment we'll have on this in YouTube and in our show notes as well. I mean, look, this is like a report card on Saudi Arabia's progress with Vision 2030 and the economic and social transformations that they're making. And I use both economic and social because they're very closely tied, as the IMF sort of hints at in this report. But if you're looking at this as a report card and you were to show this to somebody in 2016, 2017 in Saudi Arabia and tell them, hey, in 2024, in late June 2024, this is your report card, this is where you are, I think that would be welcomed with very, very wide open arms, because it's an A. I mean, this is like an A grade. It's not that Saudi Arabia is finished with its reforms, but by no means is it saying that. It's just saying roughly that Saudi Arabia is on the right track. A lot of the reforms that they're doing and a lot of the changes they're making and the decisions they're making at the top to modernize the economy and society are working, and they're welcomed by the IMF. The location for this press release is Washington, D.C. So they are saying, hey, this is the view from the IMF, and this is what we see happening in Saudi Arabia 7 to 8 years on in its reforms. I mean, just to kind of rattle off a few that you missed or that you may have said, but just I think might be worth repeating: reforms to enhance Saudi Arabia's business environment, and this from the IMF. Reforms to enhance Saudi Arabia's business environment and attractiveness for foreign investment are progressing well. Staff welcomes a recent recalibration of funding requirements associated with Vision 2030 objectives. You said that. The continued efforts by SAMA to modernize the regulatory and supervisory frameworks are key to safeguarding financial stability. The submission of the new banking law to the legislative authority remains a priority. The supervisory manuals and procedures should also be revised in line with best international practice. See, there you go. They're saying, hey, look, this is good. Keep going with this. The currency peg to the US dollar remains appropriate. I mean, the authorities' welcome efforts to strengthening financial institutions will be essential to ensure progress towards Saudi Arabia's growth and stabilization efforts. The financial sector is on strong footing. So this is like really good. I'm so glad we're talking about this for a deep dive, because it's the type of thing where it gets some headlines in Reuters and Bloomberg, and it's kind of good news. But actually, if you look at this thing, this is a outside looking in report card on what's going on. And this was published before the news that came out about 6-7 days ago on the PIF, which swung to a profit of 138.1 billion rials, which is $37 billion in 2023. That's after posting a loss of $15.6 billion a year earlier. I mentioned the PIF. It's only mentioned twice in this document, but obviously the PIF has a big role in the transformation. It's sort of investing for return and also for the improvement of Saudi Arabia in general. Total revenues at the PIF more than doubled last year to $88.3 billion from $44 billion. So what you sort of have here is hey, keep it up, guys. You're doing a lot of the right things. Here are a few things that you could do as the next step. I'm sure that Saudi authorities are aware of that. As our listeners and viewers heard from our conversation with Salman, there's next steps that are happening after the regulatory reforms that are ongoing now. They're not biting off more than they can chew. They're going bit by bit and doing things the right way. And I think when you see a report like this, you just say, okay, look, I mean, 2030, it's not the end goal. It's not the end date, but it's a goalpost. And, you want to be progressing in the right direction. Whatever happens in that date happens on that date, but you want to be where they are right now. So I think this is great to share, and you should check it out for yourself, because it's not too long, but it's kind of it goes through each of these segments and sectors and talks about each one of them specifically and said, this is what we see. So, maybe work on these things, but on the whole, things are going in the right direction. And I just think it's great that we're sharing it.
Yeah, I mean, this was posted in mid-June of 2024. So, it's fresh news, definitely, especially when you're thinking about kind of reviewing the past couple of years and economic performance over time. I mean, it's not necessarily headline news because, again, it's looking at the books, it's opening up, it's scrutinizing everything that's happening or that's happened, and that's continuing to happen. And so, if you're familiar with the way international organizations work, this is the type of work that they do, right? They look at what's happening, they look at the health of the performance of the economies throughout the world. A lot of times, the IMF is going in and bailing countries out. And this is not at all what this report is about. This report is like, this country has done so much, has already achieved so much of what they said they were achieving. They're on track to continue to improve, and they're doing better than, a lot of other places in the world. And so I think that that's, one of the things that we need to highlight is that this report really is a gold star for the country, and also a very optimistic, forward-looking report as well. And just one other thing that maybe I didn't mention that came toward the end of the report, which is something I get asked about quite a bit and most people are really interested in, again, is in energy, thinking specifically about the commitments to achieving net zero emissions by 2060. And it really just kind of talks about how the authorities are really investing in renewables, trying to find better energy efficiencies, clean hydrogen, carbon capture technologies. As we know, none of this is easy, but it's all very, very important for the future of the kingdom and the world, of course, as a whole. So they're thinking about different ways that this might be achieved. And, so obviously there's what the kingdom is doing. There's the IMF's opinion of what could be done in addition to the efforts that are already underway. But for instance, it just kind of lists off eliminating energy subsidies as one particular approach, augmenting the active green finance portfolio. This is something we talked a little bit about when we were talking about ESG. But in general, there is reference to the importance of thinking about energy transformation within the kingdom as well.
It just is worthwhile to repeat the first three sentences of this report. Saudi Arabia's unprecedented economic transformation is progressing well. Prudent macroeconomic policies, transformative changes, including through fiscal reforms and in the regulatory business environment, and strong domestic demand have helped prop up non-oil growth. Spending reprioritization and recalibration of major spending programs are ongoing. Efforts to diversify the economy have started to bear fruit. I think your term of gold star is perfect because it's not a trophy. This is not the end, but progress is happening, and this is what the IMF says. Great deep dive, Hannah. Thank you.